Ladies and gentlemen, good day and welcome to the Q2 FY21 earnings conference call of SP Apparels hosted by Systematics Institutional Equities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankit Kaur from Systematics Institutional Equities. Thank you and over to you, sir.
Thank you, Rutuja. Good evening, everyone. On behalf of Systematics, I would like to welcome all to 2Q FY21 and 1H FY21 earnings call of SP Apparel. From the management side, we are joined by Mr. P. Sundararajan, who is Chairman and Managing Director, Mr. S. Latha, who is the Executive Director, Mr. S. Chanduran, who is the Director of Operations, and Mrs. P.V. Jiva, Chief Executive Officer, and also Mr. V. Balaji, the Chief Financial Officer. Without much ado, I would like to hand over call to Mr. Sundararajan for the opening remarks. Thank you, and over to you, sir.
Thank you, Ankit. Good afternoon, everyone. A very warm welcome to all of you who are present on the call to discuss our financial results for Q2 and H1 FY21. At the outset, I hope all of you and your loved ones are healthy and safe. After subdued Q1 performance led by unprecedented coronavirus pandemic, the company is witnessing significant recovery in Q2 FY21 in terms of order book, workforce, and supply chain. Post lifting of lockdown restrictions, we swiftly geared ourselves towards normalcy without facing any major disruptions in the supply chain and workforce. As a result, we witnessed all-round performance across all our businesses during Q2 FY21. Let's talk about the garment division. Discussing on our segment-wise performance, the garment division witnessed healthy traction in Q2 FY21 as the shipments to customers increased once the lockdown was lifted there. Our customers are witnessing a recovery in demand, especially for their online retailing business. Moreover, they have also started consolidating their supply base further, and we continue to remain one of the preferred suppliers. We are also getting multiple inquiries across brands and retailers as they are looking to divert their supply base beyond China to some extent. We are exploring possible business opportunities with these brands. We have added one customer from the UK in Q1 FY21 and already deliveries started to this customer. And further one more from Europe, Q2 FY21, and deliveries are expected to start from Q4 21 onwards. Our current order book stands at rupees 2 crores, which gives a good revenue visibility for H2 FY21. Our garment division revenue for the quarter stood at rupees 148 crores, an increase of 202% Q on Q, but decline of 33% year on year. As mentioned in the previous call, we have consolidated small rented factories with bigger ones in order to reduce the rent, workman transportation cost, and other operating overheads. This also contributed to our EBITDA margins for the garment division to improve to 20.8% for the quarter. In addition, as we have mentioned in the last con call, we have efficiently worked on the consumption, wastage control, and control on personnel cost, which contributed to margin improvement. We are confident that the EBITDA margins will sustain at this level going forward. Our sewing machines installed capacity as of September 2020 stood at 5,100 machines. Our capacity utilization as of today stands at around 3,000 machines, and we expect the utilization to reach more than 4,000 levels by March 21. As of today, all the factories are operating at around 70% capacity. We are still expecting more migrants to come post-Diwali. While our order inflows, customer base, supply chain, installed capacity are very much intact, our only challenge was to increase the skilled labor to optimize the utilization of capacity. Now we have strategically planned to ensure a regular inflow of workmen for scaling up of our capacity. With regard to the spinning, after the expansion projects completed, units have started contributing reasonably to the margins of the garment division. Also, cotton prices have stabilized and we expect the prices to be around this range. Processing division, the biological treatment plant project is completed and is up and running. This has improved the efficiency of the plant, and now our capacity has increased by another 3 tons per day. This is also contributing to the margins of the garment division. With regard to SP Apparels UK Limited, the revenue stood at rupees 25 crores for this quarter, and EBITDA margin stood at 8.7% compared to rupees 8.6 crores of revenue and minus 2.6% Q-on-Q on EBITDA margins. SP UK witnessed good traction on account of revenue due to increase of online business, especially of kids products. We believe that SP UK will maintain the similar trajectory going forward. Our current order book for SP UK is at GBP 5.06 million. Let's talk about retail. As the economic conditions gradually improved post the lifting of the lockdown, our retail segment saw a decent uptick in Q2 FY21. Revenue for the retail division stood at rupees 14.2 crores compared to rupees 2.2 crores in Q1 FY21. We are expecting retail division to do further better in Q3 due to festive season and a gradual pickup in the customer's demand. We have taken serious efforts to cut costs by personnel and other overheads, which will result in improving the margins in retail. The revenue of retail will be gradually growing quarter on quarter in a sustainable manner. We have recalibrated well to the new reality by moving towards a leaner cost structure. We rationalized our employee costs and the other operating overheads. The cost reduction initiatives helped us to improve the adjusted EBITDA margins and saved around 2 to 3% overall across all divisions, which has offset the loss of MEIS incentives. Our leverage and liquidity profile continues to remain comfortable. We have cleared all the interest and debt installment obligations that were due during the H1 FY21. Our strategy as we advance a robust comprehensive business continuity plan as a response to disruption due to COVID-19 with focus on customer engagement, continuous cost reduction, calibrated expansion plans, business strategy realignment, employee productivity and efficient utilization of IT-enabled systems. Hence, looking beyond the near-term challenges, we are excited with the opportunities that the future holds. SPFL as a company remains fully geared up both in terms of the technology and infrastructure to capitalize on the opportunities going ahead. Now I will request the CFO to give an overview of the financials. Thank you.
Thank you, sir. Good afternoon, everybody. I'll just run you through the quarter-wise performance of the company. This quarter, we have made 187 crores of revenue as against 255 crores of revenue last year. It is we grew by 26.6% year on year. Our EBITDA stood at 23 crores as against an EBITDA of 38 crores last year. And our PBT stood at 23 crores for the current year as against 23 crores of last year. Our PAT stood at 18.78 crores as against 34.89 crores of last year. That last year we have recognized a DTL reversal because of the effective income tax rate changes. For the first half, we have done a revenue of 247 crores and an EBITDA of 40.39 crores with a PBT of 17.33 crores and a PAT of 12.96 crores. For the current year, our gross debt is 198 crores and our net debt is at 180 crores. Rest is available in the presentation, which is uploaded in the exchanges. Now we will get into the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manoj Dua, an individual investor. Please go ahead.
So congratulations on good set of number. Can you throw some light on the new clients which we have added?
Yes. No, one already we explained to you last time. One customer we added in the UK, who is who does their own in-house designing and supply of Disney characters licensed company. So which we already started shipping the goods. So they are in this business for the 2 generations and very strong, and they cater to most of the retailers in the UK. So that's a very promising continuous business. And the second customer is in the Europe, in France. So we expect to start the business. The shipments will start from say March, April.
Okay. I mean, last quarter, because of the lockdown, supply side was disrupted. So how much supply side has been normalized? How much percent you can think that supply side has been normalized?
The supply chain has been fully 70 to 80% is back on track we are. And there are some overseas imports and some of the special processes, special raw materials are slight delay. Otherwise, we have recovered about 80% plus.
Okay. What is the commentary of buyers for the future coming quarters?
Commentary of
From the customer.
Yes, the customers are, as I told you, that they are consolidating the supply base, and there are a lot of businesses from other countries, including China, are coming to us. So they are insisting us to increase the capacity to accommodate their orders. That's the current scenario.
Okay. And how is our relationship increasing with the clients which we added in last year? Because we might not have been communicating much more because of the supply side problem. So how this new client which we added, which have a good potential to increase, how is the relationship going on? What is the commentary from their side?
1 second. Okay. Those 2 customers, yes, the one customer, they have started increasing the volume. They started sending more inquiries, the American customer. And for the European customer, yes, we are going to get the new orders placed during the period of Q4. We will start getting the orders because we want to stabilize and then allow them to place more orders. So from Q4 onwards, we will be initiating them to place more orders.
Okay. Thank you and best of luck and happy Diwali.
Thank you. Thank you and same to you.
Thank you. The next question is from the line of Nirmal Shah from Seraphic Management. Please go ahead.
Yeah, good afternoon, sir. I just wanted to check, yesterday there was an announcement about the PLI scheme from the government for the man-made fiber and technical textiles. So, since our entire product basket is made up of cotton, how do you plan to capture the benefit of the new scheme, sir? Can you throw some highlight?
See, basically we are, the babies and kids product based, so which are, more of 100% cotton. And this PLI is something which is a very good thing, for those 10 industries where, textile and apparel is also one of the beneficiaries. But it's too early for us to, explore anything at the moment. We are waiting for the more clarity about the policies and the schemes. Then probably we'll be able to give some inputs during the next con call.
And so my second question was in Q4, considering that you already have an existing set of customers, in addition to that you have added a couple of more customers, how do you see the ramp-up capacity utilization and the revenue, and what would be the peak revenue you can achieve once the new customer starts contributing to the incremental order inflow?
See, then definitely we are, as we mentioned, we have still another about more than 1,000 machines to be fully utilized. So we will plan in such a way that there is a good flexibility for maximum utilization of all the machines, so where we can accommodate these two new customers. And within the existing factories, we can add more machines also. And once we stabilize our workforce inflow, we will start working on those things.
So what I wanted to understand was that, correct me if I'm wrong, you already have a 5,000 sewing machines, and at one point of time you were going to utilize those machines based on your existing customers which were there prior to this year, right? Now you have to accommodate new customers based on the same setup. So does it mean that your product, the product mix will go for a change, you will go for a better margin orders, and the existing customers will probably fulfill the orders to a lesser extent? Can you just throw some strategy? How do you plan to, capture this entire thing? Because you are not increasing the capacity. On the other side, your customers are being added now.
So in terms of the capacity, I guess our utilization for right now, that is today, we are at 70% utilization. So there is still another 30% possibility for us to increase capacity. The other thing is that if you recollect the chairman's speech, he said that we have strategized in terms of bringing in more workmen, where that by March end, we are looking at 4,000 sewing machine utilization. Our bottleneck is on the utilization of capacities. By March end, I guess once we reach 4,000, then we reassess ourselves going forward. So our aim is to reach 4,000 utilization level by March.
And at 4,000 machines, what will be your revenue potential, sir?
What is the?
Revenue.
Revenue potential, we can easily reach 18 lakhs per machine. So it should be close to around 740, 760.
Per month about 60-65 lakhs. Crores. A month will be around 60 to 65 crores.
Okay. Thank you.
Thank you. The next question is from the line of Sachin Shetty, an individual investor. Please go ahead.
Yeah, so congratulations for a good set of numbers. So my question is, so just now in your earlier query, you cleared that China discussion. So my question is, how China discussion shift business to India? How is the apparel market in USA? I mean, China market share in USA. And how much, if the discussion happens, and how much the India will get?
See, See, China's business, as I always mention, even 1% of the Chinese production is diverted to India, then India will be flooded with a lot of orders. So that's the kind of the match, So it's like this. Even this anti-China sentiment will bring more capacity, more orders into India, and the customers will definitely insist everyone to increase their capacity to take more orders. So this is definitely not going to affect China's production manufacturing thing, but India will be taking the advantage of the situation.
Okay. So last month I read one article that Carter, one of the big USA retailers, is I think SP Apparels are looking opportunities for the Carter. So have you got any order from Carter, or you are just discussing?
No, that article was Times of India, where there was a question that are you geared up for the Chinese fabric, which are not the conventional fabrics of India. For which I answered yes. The Carters, one of the customers, have asked us to develop these fabrics because they want to place more of such kind of products in India. So it is not that Carters is coming as a new customer; they are already our existing customer.
Okay. So now the second lockdown is announced in the UK. So how it will impact our business again?
So far, I guess we have not received any feedback from the customers in terms of how effective the lockdown is going to be and what will be the retailers on the lockdown. But I think the lockdown is only for 3 weeks, and it should not impact much because the Christmas season is near. So this should not impact any retailer going forward.
In fact, the customers have sent us the message saying that not to get panicked due to the second lockdown, we will not be cancelling any orders. So that's the message we got from the customers.
And they are not holding any shipment. They continue to take the shipment, and they are not allowing any extension also. So what they are planning is they are taking the goods and they are holding the goods there. And once the lockdown is released, I think they will be supplying in full because Christmas is very close and their sales will be good. They are expecting.
So in that this holiday season or Christmas season, how is our current order book?
So I think MD has explained that 226 crores as of today.
It is normal.
260, how much, sir? Pardon?
26.
26 crore only order book?
226 crores only.
Oh, yeah, sorry, 220. This is for the quarter or 6 months, sir?
It will be from today, if you look at it.
The next 2 to 3 months time.
That means Q3 is fully flooded with order to 226 crore.
You should not take it like this. It's the current order book. Some may be shipment in January, some in February, some in March, some in April. So the total order book and order on hand.
Okay.
Yeah, she said that Q3 is fully booked as of now.
Okay. And sir, we are doing all continuous 24-hour 3 shifts or only 1 shift we are working?
Only 1 shift for the garment team, but we have plans gradually once this workforce strategy is been in place, then slowly we will start the 2 shifts in the factories on a phased manner.
And sir, my final question: this EBITDA maintain going forward, it will improve or it will be same for Q3 and Q4?
So in terms of our EBITDA, we have guided for 18%, and CMD in his opening speech has said that we are expecting this EBITDA margins to sustain.
Okay. Sir, last one. If this 4,500 saving machine is operational, then what would be the revenue on that time?
Sorry?
If the 4,500 machines is fully operational out of 5,000, you told us that during Q4 during that time.
No.
At that time, how much revenue we can forecast for this 4,500 machine?
4,500 number, I don't know how we have got from. CMD spoke about 5,100 machines, which is fully operational.
Okay. So in terms of revenue, how much we can expected or forecast for this?
So if
the 5,000 machine fully operational,
all the machines are 100% utilization, I think we will reach 840 crores of revenue.
Sir, how much? 300 and?
840 crores of revenue.
If we utilize all these machines fully.
1 second, sir. How much revenue you are saying?
840.
Okay, sir. Okay. 840. Okay. Thank you. Okay, that's from my side. Okay, sir. Happy Diwali, sir. Thank you.
Thank you.
Yeah.
Thank you. Reminder to the participants, to ask a question, you may press star and 1. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Thank you very much, sir, for the opportunity. Now, sir, my first question was around your garment division. You did mention that you are looking EBITDA margin to sustain at current level of 20-21%. So I was just wanting to understand, as your capacity utilization increases from this current 70%, is there any upside to that 20-21% that we are talking about? And my second query is on your overall EBITDA margin of 18%. Now, as your utilization level in garment increases, your higher margin business share will increase overall. So your EBITDA margin ideally should increase. So any comment on that also would be helpful.
In value terms, yes, but the percentage will more or less same. There may be a little bit of upside.
Mr. Deepak, this is purely when you look at the matrix, 18% of EBITDA margin versus the guidance of 18% of EBITDA margin versus what we have achieved in terms of 20.8%. See, this moves up and down based on the currency also. So, like whenever there is better currency rate, it can even go up to 23%. So, like that is why we guide only for 18%, and if there is going to be better utilization going forward, you will have new people coming in, so the training cost is going to cost also. So, like you will have the training cost which will be which will bring down the margin again. So that is why the guidance is only on 18%, and up and down 1 or 2% up and down here and there it can go.
Okay. So this 18% you are talking overall, right? Including all the three business together.
No, garment division 18% is what we have been guiding for.
Yeah. But we did about 21% because of the reason you mentioned. But do you think that 20-21% is sustainable?
Not Mr. Sundararajan sir. He said that there are certain steps which we have taken. We have consolidated in terms of number of.
Right.
We have worked on the transportation costs. We have brought down the transportation costs. We have improved in terms of EBITDA margins from the spinning division. We have improved our EBITDA margins from the processing also by investing into the biological treatment side. So many reasons are there which are part of improvement in the EBITDA margins this quarter.
Yeah, fair enough, understood. And coming to the last question, like at 5,000 machine, I thought we could do about 1,000 crores of revenue in your garment division.
Yes, Mr. Deepak, we can do 1,000 crores of revenue when I do 100% utilization and 100% efficiency also.
Okay.
See, practically all 5,000 machines cannot be always in running, because always depends on the style. We need to balance the machine. So always there are 10 to 20%. 10% will be for the balancing. We have to keep them. So maybe 4,500 to 4,600 machines will be running next year by now.
Sure. I think thank you very much. That's it from my side.
Thank you. The next question is from the line of Mr. Resham Jain from DSP Investment Managers. Please go ahead.
Yeah. Hi. Good evening, sir. First of all, congratulations on, I think, very good performance on the margin side. Just on the margin side further, what we have seen is that last year there is an MEIS included in the margin. This year, actually, without MEIS, you have done almost 18% margin. which looks quite good. So my question is, what are the factors which has led to this improvement in overall margins? And so that is my first question.
As I mentioned, the various aspects, we are fully backward integrated. So there are certain savings, from the spinning mill side and certain savings from the processing division. And we are efficiently working on the consumption of the materials and control over the wastages. So all these things, put together, this is what, we promised during the roadshow also that, by the investment in spinning and this processing division will fetch about another 1% each, which has started yielding now. This is going to be the real saving. And in addition to that, as we scale up our operations, the fixed cost will come down naturally. And we have very cautiously worked on the utilization of the manpower. So these things have helped us in improving the margins. And consolidation. This is another major factor that where we have consolidated some of the small factories and merged with the bigger factories. So our overheads have come down.
Understood, sir. So my second question is on shift thing which you mentioned. So this 80% utilization which you can do on 5,100 machines, but this is based on one shift. So are all your factories equipped to do this two shift, or are there specific factories which can do this two shifts? And like how easy or difficult is to operate factories in two shifts? Because we have generally not seen that happening in India per se. So just your thoughts on the same.
Yeah, so generally two shifts are not really in practice generally in this industry, especially in India, you are right. But since we have, 3-4 hostel facilities, the factories, so, it is easy for us to manage for converting into two-shift factories. So we are yet to test it, yet to experiment it, but we don't see any challenge in this one. So we, on a phased manner, probably from April onwards, we'll try experiment one factory first gradually for a few months to optimize both the shifts in full utilization. Then we'll see the difficulties or challenges which we set it right. So gradually we will increase other hostel factories also. So we are hoping that it should not be a problem. So it will take about 6 to 8 months from now to convert these single shift factories to double shift factories.
So is it fair to say that, sir, let's say at 4,000 machines, you can do, let's say, 1,000 crores or 900 crores. Is this capacity, let's say, can one assume that by making it two shifts, this revenue can double also?
Yeah, it can, we are not going to convert all the factories to double shift. As I said that only about 4 factories where we have the hostel facilities, we will be gradually in a phased manner converted. So it will take the next 1 full year to convert these 4 factories to double shift.
So this equivalent of 5,000 will become how much, sir, in terms of capacity if you add this 4 factories?
We can go on now calculating it roughly around another about, say, double shift machines, suitable for converting into 2 shifts or about 2,500 machines. About 1,500 machines can be, if we convert everything into double shift, so there will be an addition of 1,500 machines in the same factory.
Okay, and 80% of that means you can, from 3,000 currently, you can go up to 4,800 machines is how one can look at it. Is that right way to look at it, sir?
Yeah, that's correct. From 3,000 to it can go up to 4,000 plus with the existing 3,000 machines.
Right, sir. And so just one last question related to this. So we already have the sufficient capacity now. So for the next 1.5 years, our overall capex requirement will be relatively lower, right?
Yeah, relatively not much, excepting maybe a little bit for the hostel, which we need to invest.
Buildings and all. Okay.
Yeah.
Understood, sir. Okay. Thank you, sir, and all the best, and happy Diwali. Thank you.
Thank you. And thank you.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment. Please go ahead.
Hi, good afternoon, Mr. Sundararajan and Balaji and Jiva, and congratulations on good set of numbers. Hello?
Yes, sir.
Yes, I was looking at this cost of material, which was at 42% in last year September quarter, which has come down to 31%. So how much is because of efficiently use of raw material, and how much is due to backward integration?
See, there is what we have done is, there is a change in our product mix. So where, there are certain products, during last time we wanted to feed the machines during the last time. So we had taken, as I mentioned before, that we have taken most of the orders in a bigger volumes with lesser margins. So that is the reason why last year the cost of material had slightly gone up. But now since we have restructured once we have stabilized our the product strength, and now we have restructured the product mix and made it in such a way that what we are currently is the cost of material is the real one.
So it's a more premium product, or?
Now suddenly when we increase the capacity, just to feed those capacities, definitely we would like to go for some products where the margin is very less, and subsequently we will gradually move to the better products. So that's how the things go always.
Okay, great. And the second thing, see, if we say that if we can 100% capacity utilization, say 5,000, with whatever marginal 10-15%, we are targeting around 840 crore kind of a sales. So which roughly works out 210 crore per quarter. Whereas with this 3,000 machine, we have already achieved 1,065 or 165 crore sales quarterly. So I'm just confused that where is the gap,
No, we never said that there is installed capacity of 5,000, but we will be utilizing only about, say, 80 to 90%, because always there is 10% machines are needed for line balancing. We cannot fully run all the machines like spinning mills.
Correct. So, sir, still with say utilizing utilization of 3,000 machine, which is also in the September last month, so average may be lower. We have achieved sales of 165 crore, whereas if say even 4,500 utilization, we are talking of 210 crore per quarter. So where is the gap? I just don't understand.
No. But see, 165 is consolidated number. If you talk about only the government.
Standalone number, sir. I am looking at standalone number.
Okay.
So consolidated is 190.
Mm-hmm.
So 165 is of standalone garment division only.
150 crores is the revenue of garment division, out of which 130 crores is the exports alone. We are looking at 130 exports versus 840. That is what we are trying to say.
Okay. So, and balance is what? 35 crore?
The other, not 35, it is 20 crores, where you have the duty drawback, ROSCTL benefits, which are part of that, and also the other revenue which comes from third-party dyeing from the dyeing plant, and a little bit of yarn which we sell outside, which is excess production. So that is all put together is 150 crores.
Okay.
But finally, you need to compare with 130 to 200.
200, yeah.
Okay. I understand now.
Yeah, we are talking about 200 only for the export.
Garment division.
So now, sir, this ROSL, this duty drawback, and which is, MEIS benefit has been withdrawn. So what sense are we getting from the government? When do we expect,
So ROSCTL has been extended until March, which is currently at 4.7% and 2.1% from duty drawback. That is what we are getting, and MEIS has been withdrawn. That's the current status.
But MEIS percentage, how much was it?
It was
at 4%.
So that will
at 4%.
From which quarter?
So like last and second quarter, we had MEIS 4%, but they retrospectively reversed it in the Q3. So from March onward, they have reversed it. That's the status.
So in this quarter, Q2, it is not there, correct?
Yeah. Now it is not there.
Since last year Q1 of 2020.
Financials it would be.
In financials, Q1 20 and Q2 20, it was there. MEIS is there, but subsequently in Q3 20, it was withdrawn retrospectively, including Q1 and Q2 of 2020. Now that is continuing. There is no MEIS.
Okay. So are we, sir, looking any kind of a benefit because we are, employment generation industry. So any sense are we getting from the ministry some kind of benefit?
We have been requesting the local association to talk to the ministry to get better benefits so that we can support the export. We are expecting our finance minister to come up tomorrow and come up with fresh stimulus package for the textile apparel industry.
There is a strong lobby about FTA with UK.
Okay. So how that will benefit us?
Yeah, definitely you will get, because it's more or less like a duty free. So we will get better margins and the more orders will be coming to India.
Okay. And currently, sir, in this, you said in this quarter we must have some benefit of because of rupee depreciation vis-a-vis euro, because euro. So how much because of this currency benefit is there in this quarter?
No, but the customers, they always take that into account when they negotiate it.
Okay.
So that I don't think we have great benefits. Maybe a 0.25% or 0.5%. We can you can play. That's all.
So, sir, if we have to really look, because sometime we earn also processing fee also. So one has to really look once we reach these 840 crore kind of a garment division revenue. So what will be the company's revenue and EBITDA margin?
See, first of all, we are not committing, we are not giving any guideline on 840 crores. That one gentleman asked about it, then he said if we want we can go up to 840, but we are not committing 840.
No, I agree, sir. If totally, whenever we reach or something, if things open up more, so what kind of revenue one can really look, and the kind of client that we are adding, say next year, if subject there is no lockdown and things normalize from say here on, so FY22, what kind of a sense are we getting?
So in terms of demand, we are getting good traction from all the retailers. The demand is very good because we are in a very niche category, and it all nails down to or boils down to the capacity increase that we are going to do over a period of time. So that is the real matrix which we are working today. That will be our main strategy going forward also.
And sir, of course, this quarter, because for whatever reason the working capital has gone up. So is there any room to bring down the working capital cycle?
So you are looking at the working capital cycle versus the March 31st March number.
Correct.
Right, like if you look at our overall working capital utilization, we have been utilizing at 160, 170 crores of working capital right from day one. But during the month of March, what happened is that we have not paid creditors for the last two weeks because of the lockdown. So the utilization level came down. Now we are looking at the fresh limits which are as from 30th September, where there are no pending which are payable to the creditors. So we are at normal utilization level, But in terms of working capital, inventory, if you look at, we are at par with March 18 numbers where we were at 240, now we are at 240 crore of inventory. What we can do in terms of decreasing the working capital cycle is that if we are able to take orders from the customer with a short production cycle, then that could be possible.
So Balaji, Mr. Balaji, my question was on the receivable side. So which was 85 crore as of March, whereas it has gone up to 105 crore in September end. So is there any room to bring down that?
Even that is also contributing to the, because March 15, we have received funds from the customers until March 31st, but we have not paid. That is what I tried to say.
Okay.
And no exports happening for 15 days also. So there is no accumulation of receivables.
And now currently how is the split between UK, Europe and American client?
Americans now are at 13%. The UK should be 55 and balance should be Europe.
Okay. And is there, I mean, margin differential is there between, I mean, all these different geography?
Margin differentiation between margins, there could be
the same because the product, it all depends on the product. We are catering the same products to across all the countries, so there is no big difference in the margins.
There should not be any big difference. Yes.
Okay, thank you. That's all from my side. All the best, sir.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Vikas Jain from Equirus Securities. Please go ahead.
Good evening, sir. Thanks for the opportunity. So my first question is with regards to the average realization per piece that we clocked this quarter, that is 123 rupees. So can you just briefly explain, first thing, what was the mix of our products? What is the share of basics and fashion into this?
So for this quarter, the realization of 128 itself shows that we have done a lot of niche products for the current quarter. And that is why you find material cost on the lower side and labor cost on the higher side. So product mix, madam, should be in the position.
Yeah, product mix, basic is only 30 to 35% and the balance 70 to 65 to 70 is on fashion for this quarter.
Right. Right. So, but do you expect when we say that our Q3 and Q4 looks robust, so do you expect that this mix to largely stay at current levels, or it should even out at around 50-50 for the next 2 quarters, depending on your order book that you have currently?
You are talking about the realization?
Yes, realization.
See, that depends product to product and customer to customer.
It will range from 110 to 130.
110 to 130.
Sorry, 100 to 110.
All right. So that's what I'm asking, sir. The realization that we clocked this quarter, we expect it to normalize in H2, right?
So the same, you cannot extrapolate the same realization rate for H2. It could differ. That is what it all depends on the customer mix and the product mix. So you cannot go by that.
Right. Sir, and one more question on the garment margins. Sir, if you could quantify what are all the reasons that led to this higher margins, the product mix contributed this much, any quantification that you can give?
I mentioned it before, you know, the 2% to 3%, you know, from spinning and the processing division, where we have done, you know, this full production of spinning and in processing division, biological treatment plant project. So these are all, you know, it has enabled us to increase the dyeing capacity and spinning productivity also. And in addition to that, we have done a lot of control over overheads, the personnel cost reduction and transport cost of the people mobilization cost and consumption and wastage control. So a lot of things which I mentioned during the last con call, which we already started working on it, and we are straight away able to feel the difference of it, and this will continue.
Right. So as you said, the spinning and the processing investment that we have made has started yielding results. Second thing you said about the cost control that you have exercised in H1. So my question is, while clubbing of the factories and savings on the logistics cost would continue, but what part of it would probably return back to its normal levels? Means if you could in percentage terms quantify how much of the cost savings would be sustainable and how much would be as normalization occurs further, how much of it would return to earlier levels?
I think as of now we have reached a level where we'll be able to maintain this cost control, and only scaling up will help us in bringing down the cost little bit by going for 2 shifts in the factories. So this will definitely improve the margins by further reduction of the overhead. But otherwise, it's an ongoing thing, cost controlling on the personal cost, efficiency of production. So these things will continue to go, but it will increase marginally quarter on quarter.
So you're saying whatever cost control that you have achieved is all of it is sustainable?
Yes.
Right. And my last question is on the retail side. Sir, while other peers who are into the fashion and apparel retailing, they have posted they have posted a recovery on a sequential basis. But what has led to a specific margin that you have clocked in this quarter around 5%? Anything that is a one-off or any special measures that you have taken in? And can we expect this 5% kind of a margin on a sustainable basis going ahead?
For the retail?
Yeah, retail.
Yes, on the retail.
See, reduction, we have done so many things on the cost reduction front.
On the retail front.
Employees, non-performing stores has been closed, and we have moved people out where they are not performing. So we have done a lot of work on the retail cost reduction work also. We have done even in terms of shifting the corporate offices to a smaller place so that there is cost reduction, and also on negotiating with the rents to the landlord, where at least for 1.5 years, 2 years, the reduction in rent will be effective. So much of work has also been put on the retail division, which may not be visible on the face of the record. But what happens is that we are able to save some huge cash losses that could have happened. So we have closely saved close to 50 lakhs in terms of personal cost alone per month. But what happens is that once the stores all open up, then there could be small increase, but it will be only on the performing stores only.
Right. And so my last question is on our strategy for the retail. Any concrete strategy that you have planned for the growth of this division?
So in the opening remarks, CMD has stated that we are expecting retail division to move forward considerably and do sustainable growth over a period of time. So that answers your question.
But any guidance in terms of the investment for the growth into this business? And
we have already explained. We are the board has already explained that we will not invest much more into the retail. Retail will have to work itself within the boundaries in which it is presently available. So it's up to them to liquidate or manage the cash within the available sources.
All right. Understood. Thank you so much. Thanks for answering, and have a happy Diwali to you all.
Thank you. Happy Diwali. Yeah. Thank you.
Thank you. Ladies and gentlemen, this will be the last question, which is from the line of Naushad Chaudhary from Systematics. Please go ahead.
Definitely. 3-4 quick questions I have. First one on the customer side, sir. If I recall the last earning call, so we had added around one UK customer, and we were in talk with 2 US clients, and this quarter also we have added one customer. So total of 4 customers we have added. Just wanted to understand when this USA clients would start giving us revenue, and what is the potential of all these 4 customers in terms of business to us?
No, the last time when I mentioned that we are talking about the one US customer, but we have not gone ahead with because the order size, the minimum order quantity was not attractive enough. So we have not gone ahead with that customer, although all exercises were done. So we were a bit concerned about the minimum order quantities. So we are not going ahead with that one US customer. But instead of that, we are adding one customer from the Europe, so which will be much bigger and the volumes are much bigger. So that will offset this replacement for this one.
Can you give us a figure? What could be the potential of all these new customers which you have added?
These new customers are as good as our existing customers' volumes.
Okay. And are these direct retailers, or are these any of these are distributors?
One is a retailer. Another one is the licensed product suppliers, which in other words, they will also be tied up with our existing customers to supply the licensed products through us.
Okay. And in terms of number of employees, if we can share the figure, how many number have as of 2Q this year versus last year?
Number of employees this year versus
immediately we don't have it right now.
We'll be in a position to share it to Ankit later.
Okay. And in terms of garmenting factories, sir, we have consolidated, and some smaller factories we have shut down. So how many garmenting factories we have today versus, if I remember, 16 or 17, around 20 factories we had earlier?
We have 16, and probably after March we will be consolidating further by another two factories. So it will become 14 factories.
Okay. And this will be our, going forward, this will be our strategy of having less number of bigger factories instead of having, a large number of smaller factories.
Yes.
Okay.
That was the legacy because, when few years ago we wanted to increase the business volume, so we had to go for much smaller factories of rented building. So now we are financially much better place, so we are just consolidating them with a bigger and better factories where all the efficiencies will be much better, which we have seen already by consolidating these 2 factories.
Okay. If I remember it correctly, our strategy of having multiple factories was due to availability of labor. So we had a plan to have a factory near to the labor's availability, and that is how we stuck up into having a large number of factories. So
Yes,
won't we have any?
Even now, that is the strategy. Definitely, we have to have satellite factories to strike a balance between the hostel migrants and the other hostel factories with the local workers also. So that strategy is still, on, and still it is working. But number of small can be consolidated to one big in those areas. That's what we are doing.
Okay. And lastly, sir, what is the cotton inventory we have, and the price, if you can share?
Cotton inventory as on 30th March? September?
As on current balance sheet of 1 FY21.
Can I share with you later? I have no information. 1 minute.
Okay, till the time you get that number, one more question. I have just a clarification, sir. If I understand it correctly, 5,100 machines, of which we are utilizing 3,000 machines, and you have a target of reaching it to 4,000 by 21. Is this information correct?
March 21.
Okay. ठीक.
Cotton stock as on 30th September 2020 is 30 crores.
Okay. Okay. That's it, sir. Thank you so much. All the best.
Thank you.
Thank you. As this was the last question, I would now like to hand the conference over to Mr. Ankit Kaur for closing comments.
Thank you, sir. Thank you for taking out time to discuss results. And I wish everybody at SP Apparel a happy Diwali and prosperous New Year. Any closing comments, sir? I will be happy to hear from you. Thank you very much.
Yes, Ankit. So I would like to just give a message that we are very optimistic about our business plans. Way forward, see since the time of listing, we had faced so many challenges right from at the time of listing, Brexit and demonetization, GST things, and MEA withdrawals, and now again this COVID-19 thing. So constantly, once we have got listed, and we were not able to focus on our core activities, only fighting with such kind of things. So this has been one of the reasons why we have not really shown big numbers and up to the expectation of investors maybe. So, but we are completely back on track, and we are very excited about the years to come, and we are very aggressive on our plan. Where as I mentioned in my opening speech, that we are all set with the customer order inflows and the supply chain management and the infrastructures, capacities, and internal systems to manage the whole processes. Everything is in place, and only we were facing until this COVID. Until this last month was the mobilizing of workforce as much as we wanted to fill our capacities. But now we have been working very aggressively in the last 2-3 months, and we have strategized certain things, and where we have got a regular inflow of workmen every month, and so we regularly take few people, say 100 or 200 people, and train them and place them in the factories on a monthly basis. So there is going to be a constant increase in the number of lines over a period of next 12 months. So this is a very interesting subject, and we are all geared up. Our whole team is all ready to start this assignment. So we are very confident as we grow our capacities, and the order inflow will also naturally increase. So we are very optimistic about it. Next financial year will be, I hope it will have a new height, all-time high when compared to the previous years. So I wish to close the meeting. I wish to thank everyone for being a participant of this con call, having interest in our conversations, and wish you all very happy Diwali and good luck to you. Thank you.
Thank you.
Thank you. On behalf of Systematics Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.